Hello guys, it's PEX here again and I am super excited to bring you this one today. Today is 29th of January 2023. How has your January been? Have you been profitable? Have you been dashing your money to your brokers? Or you've been returning your money to your funded accounts? Let's get to it today. What is the meat of today's video? Last week on 22nd of January, I talked about the market next movement for the previous week that we just passed. All right, this week, this new week, what are we expecting the market to do? When I talked about last week, I said you guys could screenshot it for future references. I made my own screenshots, and as you can see right here on my screen, you would understand that the market got to this level, pushed up, came down. And the question here is, are we going to push up immediately or we're going to come down first before we have that impulsive bullish move? Let me open the eyeball of my analysis for you to see well enough. This time you want to take screenshot, right? Take the screenshot because PEX is always 70 to 90% right. You can be 100% right, 70 to 90% right. Let's get to it. I open the eyeball and now today, what are we going to do? What are we going to do? What are we looking out for? What signs are the market giving us? That's the first question you need to ask yourself. What signs are the market giving us right here? Now, speaking about signs, we can obviously see this rejection on this candle right here on this major level. All right? You need to have the eagle's eye perspective. What does the eagle's eye perspective mean? If you're confused on the lower time frame, you need to head on to the higher time frame in order to look at the market with a good descending perspective. You stay from the higher time frame and look at it downwards to the lower time frame. All right, that is why I keep preaching about the PEX strategy. You need to get the PEX strategy course in order for you to understand why I keep looking at the higher time frame, the weekly, the daily, the 4-hour, the monthly time frame. Why do I keep looking at it? I don't just look at it for fun. I look at it because that is where the big banks, that is where the big guys, the big boys place and look at that's where they look at the trade in order for them to come and hunt your stop loss. You that is trading on the 15 minutes, you that is trading on the 5 minutes, you that is even looking for a sniper entry on the 1 minute time frame. Are you serious, bro? You're looking for a sniper entry on the 1 minute time frame. I'm not saying it's bad. I'm not saying it's bad. All I'm trying to say here is the 1 minute time frame, it is super subjected to market manipulations. All right, you may get that long big candle to the downside, bro. You're deceiving yourself. Stop looking at the 1 minute time frame, because when you're looking at those time frames, you are deceiving yourself in order to get sniper entries and low stop loss, because that is where guys look for low stop loss and sniper entry. Come to the higher time frame, look at the big boys, look at where they're looking at, so you can trade like them and not be opposite of what they are doing. Enough of the pep talk, let's get to it. So right here, right now, just as I analyzed last week, the market came down here. Now the question is, are we going to go up or come down a little bit? Look here, right here, you would understand that, okay, this market has given us what? A candlestick, but not really a gravestone or a pin bar. It is kind of looking like a pin bar anyway, but it is on the major support level. Let's head on to the weekly time frame. Let me show you something ASAP. I told you guys that the market, before it can reject to the downside, it needs to get to this key level. If you can remember, you need to go back to the video to understand what I'm saying well enough. You need to get to the key level before we get any sign of push to the downside. All right, so it got to the key level just as I analyzed. Then now it is back to this level, rejected back up, and it's closed here. The question is, are we going to push up, or is this doji going to be effective? This is a bullish doji candlestick. Don't get me wrong. This is a bullish doji candlestick. Remember, it closed at blue. As means that closed at red, it is a good confirmation that we could go downwards. But right here, it closed at blue. But I want you guys to come. Let's go to the higher time frame. Let's go to the max, the 1 month time frame. It may not be the max anyway, but let's head on to the monthly. This is the monthly time frame right here. What is happening on the monthly time frame? You understand that if you don't understand, you need to get the PEX strategy course, because that course will open your eyes. $50 for 1 month, $150 for just 6 months, that you would learn a lot of things. Then for 1 year, you need to get it for $299. All right. Then if you want to make money instantly, all right, without stressing yourself, all you just got to do is register with the VIP Signal membership. That way you would make money and still learn, all right, That way you make money while you're learning. With the signal, it is very appropriate. So right here, right now, you would understand that, okay, this market has rallied all the way to the downside. And now, what is happening here? You understand on the monthly time frame, this is a downtrend. Truth be told, this is a downtrend. Lower high, lower low, lower high, lower low. Then we got the equal high and it drowned. Look at it, equal high and a double top on that equal high. If you understand in the PEX strategy, in strategy development, you should know that whenever you see such, the market is about to give us a massive push to either the upside or to the downside, regard of the chart pattern you see. So the market has run down to this side. What we are experiencing right here is called pullbacks or retracement. Say it again, pullbacks or retracement. Anyone you want to call it. I call it pullbacks, I call it retracement. So now the market has gone from here, pull back all to this level. So right here is where this should be a 50 fib or 618 area. Let's bring out our Fibonacci. If you don't know how to use the Fibonacci tool, and if your Fibonacci is not like mine, you need to head on to how to use Fibonacci, or you head on to how I made 10K, how I made 10K trading gold. The video is on this channel. Stay to the end. You're going to see a link to it. How to use the Fibonacci tool and how I made 10K. Any of them, you can click on it and learn how my Fibonacci is like this. For further understanding, get the PEX strategy course in order to learn more. So right here, right now, you'll understand that, okay, this market has given us the 50 fib on this swing level. Remember, this is a downtrend. All right? On the monthly time frame, this is a downtrend. So you don't want to mistake the trend. So this is a downtrend on the monthly time frame, but on the weekly time frame, the trend is pushing to the upside. I call it a preceding uptrend. All right, don't get me wrong. On the monthly time frame, it is obviously a downtrend. On the weekly time frame, it is going to preceding uptrend until it takes out this high on the monthly time frame. Then we can fully say the monthly time frame is now an uptrend. But as it's not taking out this high, you can't really call the monthly time frame an uptrend, even if the lesser time frame are uptrends. I hope you got me. So now the 50 fib level, what happened? If you look closely to this side, let me zoom in. If you look closely to this side, the market got to this level but couldn't go any further up, bounce down, meaning there is a form of resistance at this level. So now you don't need to neglect it, you need to mark it out. All right, that is what I've done there. So now this is a swing level. The market broke it with ease, got to this level. So we are here right now. What are we marking this level for? I am telling you that let's get straight. This market has the tendencies of dropping first before we have the push to the upside. Quote me anywhere, any day. Let's go to the weekly time frame. Let me show you something and why I said it. Can you see? Do you understand? Look from the swing low. Look at the recent high. I mean, this is the beginning of the fib. This is the end of the fib. All right, this is the 50 fib level. Like I said, let's go back to the 1 month. Let me show you the color of what. Can you see the color is red? I intentionally left it red in order not to be confused. This is red, right? Mark it out. Don't mistake it. Mark it out. I said the market needs to come down to this level before we push to the upside. All right. So we have two levels. We have two levels. For the monthly time frame, it needs to come down here. But let's go to the weekly time frame. Let me break it down for you in a better way. Come here. Can you see the level right here? Yeah, can you see the level right here? So this is the 50 fib. All right. The question here now is, with what we are experiencing on this level, can this level hold on for us to push to the upside? All right. I need to delete this right now. All right. This is the 50 fib level where the market is currently. That is this aligned side already. So now, can this level, which is the daily time frame level, hold this market to the upside, or can it break it through and get to this side before we push to the upside? Let's go to the daily time frame. Let me tell you what literally would happen. All right, we are having two perspectives right here. You know, this is trading, so you need to think in probabilities. All right, if we get, now listen up. I want to peel the beans. I want to show you what you need. You need to see. All right, this market has given us this candlestick. Yeah, but this is not a candlestick pattern. It needs to go a little further up before we can call it a inverse. You know what I mean? A inverse shooting star or a shooting star. You know what I mean? Or a pin bar, anyone. So now this market got to this level. If you look on the 4-hour time frame, before we go there, if you look here first, this market has tested here before. Let me zoom in. This market has tested here before, all right? Because it tested here, it couldn't push it up. Now we are here again. It tested it and is driving to the upside, all right? Get this picture clearly. The market came here, tested it, right? The first test, it's rejected and created somewhat of like a pin bar, but not really a pin bar, because these two are looking alike. So if this level was meant to push it to the upside, definitely this time it would do it. Do you understand me? Am I communicating? If it wanted to push to the upside, this level, this one should do it. After this one, then the next candle, which is this week that we just passed, should push to the upside, but it didn't. So right here we are back again with the same rejection. So I am telling you that this level have some tendencies of breaking. What did I say? This level have some tendencies of breaking. All right. Remember, it tested it here, it pushed to the upside, came here, tested it again, but it has not gone, because remember guys, this level is a very strong resistant level, right? So now we are here again. The question is, are we going to push up? But I'm telling you right now, because of what I'm seeing, this level could be broken. All right, we're going to have something like this. Look up. We're going to have something like this. Push down. All right, we're going to have something like this to push down to the downside. Then before we have that move to the upside, before we have the push to the upside, do you understand me? Because this market needs to come down here, test this level, then we push to the upside. Remember, before you take a trade, you need to derive your confluences. And what confluences can we get of this? Right here, you should understand that, okay, from swing low to swing high, this is going to give you the fib level. All right, once it does that, what do I mean by swing low to swing high? Let's just drag it through. This is the level. From here, push to this side, you would understand that the 7-9 area is aligning with this level right here. It is close to it. Do you understand? So now the trend line is there. So we are having a double bottom, number one. Number two, the trend line. Number three, the support level. Number four, it's an uptrend. I hope you get me. This is how you derive your confluences. It is all in strategy development. In strategy development and entries, entry and exit. In order for you to learn how to enter a trade, you don't just dive into a trade because you want to enter the trade. No, you need to see some certain things before you enter a trade. Euro USD, like I said, we could have something like this. This is the 50 fib, as you can see right there. The market could break here, retest back on the 50 fib and drop. All right. Or we could get something like this, push to the upside, all right, back to this level, and we push up here. Make a screenshot of this, make a screenshot of this, make a screenshot of this, and next week post it to me. If any of these two doesn't happen, then I need to go check some things out. So this is Euro USD, the daily time frame, just as analyzed. That is the way I should expect it. The market could come here, create a double top, all right? The market should even drop to the side, because this double top is the first double top on this level, or the third triple top, not the first double top, because here we've gotten the first one, the second one, and this is the third one, triple top. So the market could come down to this level before we get another swing move. And of course, from swing low to swing high, we should have a Fibonacci helping us to guide that level as well. Definitely, the 50 fib is right there. So it is going to guide our movement to the upside. So now, psych! This is Euro USD, the daily time frame, and I've made the analysis for Euro USD. You know how we'll do it. XA USD is not a problem. It should look something alike because this price are closely related. So right here, right now, I am telling you that this level could be broken, all right? It could be broken, retested back on, and get to this level. So now the question is, which one will you take as trade? Do you want to take the trade to the downside, or you want to take it to the upside? For me, I like following the trend, so I'm going to wait. Meanwhile, even before this market, if we're literally going to break here, it is going to be like in the night. So when you wake up in the morning, you could see the market at this middle here. All right? If you see the market at the middle, I would suggest just calm yourself down. Get to this level. Once you get to this level, I promise you it is going to push to the upside. and you're going to bank lots of pips. This is Euro USD. From here to here, this is about 70 pips. Yeah, that is good 70 pips. All you just have to do is give it a very good lot size to flip your account. Or if you move to this side, then you need to see your entry strategy in order to take it going. That is it for Euro USD. Let me take a screenshot first. If you don't want to take a screenshot, let me do that. I just did. All right, let's get to XAU USD as we do it. I said I'm going to drop some few pairs as well for you. Most of you guys that trade GJ and GU, I got you. Stay to the end. It's going to be super exciting. So XAU USD, still the same thing. We are still on it. I've done the analysis already. I just need to share it with you guys. Right here, right now, like I said on Euro USD, these prices are closely correlated. So you need to understand that this, let me take out this level. All right, just like the arrow that you're seeing right here, we could as you can see, we've tested this level so much. So now I'm having the tendency that this market could break. We could retest and drop to this side. Then when we drop to this side, obviously we're going to have a Fibonacci connection and a trend line. So, and this is an uptrend, a preceding uptrend. What is the difference between an uptrend and a preceding uptrend? An uptrend is the general flow of the market from the higher time frame to the lower time frame is uptrend. But a preceding uptrend is that kind of uptrend that is converting from is like a trend reversal. It was a downtrend, but now it is trying to become an uptrend. I call it the preceding uptrend. Man, you have a lot to learn in the PEX strategy course. You have a lot. So as a beginner trader, as an intermediate that is finding it difficult to be profitable in the market, all you got to do is get the course. For a month, you're going to learn. If you're an intermediate, you just need it for a month, bro. You just need it for a month. If you're a beginner, you need it for at least 6 months. For at least 6 months. And if you want to learn it so well and digest it well, take it up for 1 year. All right, the signal is still available, the VIP signal. Learn how to make money immediately. All right, make money with the signal that I'm going to be dropping for the VIP group. And if you want to get the free signals, it is on the Telegram channel and the link is in the description. Do well to check it out. And also, I drop trade signals on my Instagram stories, so you want to follow up and don't miss out. So XAUSD, it is easy, just like Euro USD. We have to have a push to this side, bounce down, or we reject to this upside, reject and push to the upside. When we get to this level, we are going to surely have the significance presence of a double top, so the market could drop to the side or half then push to the upside. But my prediction for this is the market is going to come down, all right, because we've tested this level enough. We'll come down to this level, push back here and drop. So the question is, which one will you take? Will you take the move to the downside or will you take the move to the upside? I don't advise taking both. Well, this is weekend, so before you wake up, unless you want to stay up all night, bro, it's not advisable. Do not trade gold in the midnight. Why? Because the spread is going to be massive, right? If you're trading a funded account, like you're under a firm, you are on your own, all right? You are definitely on your own. So if you're trading your own money, if you can bear the loss of the spread, it's good. Imagine when you have such spread and you still lose the trade, bro, you're going to be messed up. So now, that is that for XAUSD. It is not a problem, all right? Get the course and understand how I do the trading and how I make the analysis. So now let's head on to GBP/USD. GBP/USD is not a problem. It's not a problem. I made a trade. I banked a good pips on GBP/USD last week. I didn't really trade GBP/USD that much because I'm not really a fan of GBP/USD. All right, but I felt like, okay, there is a good opportunity, so why shouldn't I get on it? So now GBP/USD is a preceding uptrend. We've gotten to a double top at this level. So the market came down, created a triple top right here. But this M pattern that is trying to form, I was expecting this market to get to this level, though it did because of the news. That's the GDP news that happened, I think, on Friday. Yeah, 2:30 p.m. It happened and the market pushed to this side. But because I don't trade news, I had to cut my positions in few profits. Here, I just closed it out because I do not want anything that would happen during the news. All right. So the market came to the downside just as analyzed and rejected back up. So are we going to break this level and get to this side, or we are going to push to the upside? All right. It is onto GJ. It is onto GJ. With what I'm seeing, we could have a push to this side, then we'll push up. All right. But I have nothing to do with GU in this level. I need a break here, retest, and a bounce back up here. or an absolute push to this downside, because I have nothing to do with it in this level. All right, I need it to break here, come here, right, give me my entry strategy, then I'm going to push to the side. Bro, I'm telling you, GU is going to do this. All right, it's either it pushes up here and push. Now, what do I mean by thinking in probabilities? Thinking in probabilities on one position. Oh man, this video is becoming long. Well, it is filled with value, so you need to stay to the end. Though we are rounding it up because we're talking about GJ next. GBP JPY. That currency has lots of pips. It is like XAUSD. It is like gold. So right here, in order for you to think in probabilities, thinking probabilities doesn't mean thinking for buy and sell. No, thinking for buys only. But where is the next opportunity that a buy can come in? Now, what do I mean by thinking in probabilities? This is what I mean. Because I have in mind that I want to place for a buy, I just need to look out for the closest and the most supported support. I hope you get that. I need this market to push to this side, get back down here. This is a support level, right? Every break of a resistance becomes a support, all right? I need this market to come down here and push to the upside. That is me thinking in probabilities, but my probability is centered on one position. I see so many guys be like, okay, I'm thinking in probabilities, meaning if this market do like this, I'm going to enter sell. If it do like this, I'm going to enter buy. Bro, that is not it. You need to follow the trend. All right, like they always say, the trend is your friend. Why should you break your friend's heart? Don't do that. So now that is it for GJ. You need to take a screenshot as well. All right, that is it. Like I said, I have nothing to do with GU in this level. I need it to come down here or break retest on this level. Then I'm going to shoot to the upside. So now onto GJ, and we're going to call it the last one. All right, GJ is quite complex, but you need to just have the understanding of GJ. All right, GJ has given us a good move on this level. I banged about, I think, 70 pips or 80 pips. I don't know on GJ. But compared to GJ, 80 pips is small. You need to allow GJ move well. It is very good for swing. All right. So you need to just, let's go to the 4-hour time frame. So let me just show you something easily sharp. You need to follow the trend. GJ is a downtrend. Obviously, you don't need to ask me that. You need to go to my previous videos to learn how I identify the trend, and you need to get the course in order to understand how to trade when you've identified the trend. So now I need this market to come down to this level, push back up, then I bang my move. All right, or I need this market to push to this side, get here, and we move to the upside. Then this is where I'm going to take my move because this is a downtrend. So I'm giving you this expo. That is what we call it in secondary school. Expo. That is, we talked about Euro USD, just as seen on my watch list. Euro USD, XAUSD, GBP USD, and GBP JPY. Now, what is my favorite pair here? Well, on my birthday, we're going to talk about that. Yes! My birthday is going to have something great. February 8th, 2023, I'm going to be doing something. Not even February 8th. Before February 8th, all right? The promo is starting tomorrow. Tomorrow. You do not want to miss it, all right? You want to join the VIP session to make money with us? This promo is for you. So you need to get on my WhatsApp or my Telegram or my Instagram. The link are all going to be in the description. All right. PEX got you, and I'm going to see you in the next one. And yes, please and please, risk management advised. Please, I cannot stress this enough. If you don't have risk management, how would you come back to take another trade that you are sure of this time? All right. Euro USD, XAUSD, GBP USD, and GBP JPY are 4 pairs you need to be trading this week because PEX has showed you the way already. I remain PEX, PEX FX, XAUSD Legend, PEX everything, PEX. Check me out on Instagram, and I'm going to catch you on the next one. Please and please make sure you like and subscribe. PEX got you, and I'm going to see you on the next one. Share to a friend that usually blows his account so he can stop dashing brokers money. PEX got you. Peace out. Shit.